So very often I'm being asked, Kai, what stocks do you recommend me to invest into? And in this channel, I never give investment advice because first of all, I'm not a licensed financial advisor. And second of all, I really think it's extremely difficult to know which company will still be doing well 10, 20 years from now. I'm a long-term investor, right? If you want to day trade, I'm not the right channel for you. But if you want to invest for the long term, it's very difficult to know which stock and company is going to do well for the foreseeing future. And that's why I'm a big fan of ETF investing into an index. And while I never give specific stock recommendations, I always recommend beginners to start investing into the S&P 500, the 500 biggest American companies that don't only operate in America, but obviously on a global scale as well. So by nature, you are diversified. And there are great ETFs out there that you can invest in to participate from the S&P 500 gains over time. Some of those ETFs have fees as little as 0.03%, which is really incredible. And you can buy them on stockbrokers that charge you zero commissions for it, such as Lightyear or Trading 212, some of my favorite brokers. However, for some of you, the S&P 500 might be a little bit boring because it only grows by 8 to 9% per year over the last 30 years, which in my opinion is really not too bad. It beats inflation in many ways, but I understand that some of you who are on the younger side, let's say, want to have a higher risk position in their portfolio without investing directly into individual stocks. And for that, I may have a great solution for you, which is investing into the NASDAQ 100. That's another very popular index similar to the S&P 500. That is the NASDAQ 100, and often people talk about it to measure how the stock market and companies are doing overall. But first off, let's start looking what the NASDAQ actually is. So the NASDAQ by itself is actually an electronic marketplace. So it's just another stock market where you can buy shares of stock. Like the New York Stock Exchange, NASDAQ is yet another one, but it was founded a little bit later in 1971, and it was the first electronic stock market. So by nature, it is more tech-driven companies are there. So a lot of the new companies that you can invest in, such as Apple, Microsoft, Amazon, they're all listed on the NASDAQ. So that's a stock market really more geared towards tech companies. But then specifically, we want to look at the NASDAQ 100. And what's the difference to the S&P 500? So obviously, the NASDAQ comprises of 100 companies versus the S&P 500, as the name implies, consists of 500 companies. But that's not the only difference, because the NASDAQ actually can also include foreign companies. So that's the difference. For example, the companies, we'll go through this in a second, like ASML, a big chip equipment manufacturer based in the Netherlands. That's actually also part of the NASDAQ 100. So that's really good. You have even more diversification in a way. So that's quite interesting, while the S&P 500 is only for US companies. Another big differentiation is that the NASDAQ 100 excludes financial companies. So no financial sector related companies will be part of the NASDAQ 100. Now you may or may not like that. It's up to you, but that's just something to keep in mind. If you want to invest into it, you won't benefit from financial companies in that. In the S&P 500, you're going to have the big banks and so on. So it's much more diversified in that way. And the last differentiation is that the NASDAQ 100 only consists of companies listed on the NASDAQ exchange. Obviously, as the name implies, the NASDAQ is a stock exchange, so they only consider companies listed over there. So if you want to invest in a company that's not listed in the NASDAQ, then obviously that index won't be for you because it won't be featured in the NASDAQ 100. Versus the S&P 500 tracks the 500 biggest companies in the US, regardless of which US stock exchange they're listed. So some of them can be listed on the NASDAQ, but others are also from New York Stock Exchange or other exchanges. So that's a bit more inclusive in that way. But of course, you might be very interested, what are the NASDAQ 100 companies? Let's have a look and find out. So obviously, you see here at the top, the 10 biggest ones are fairly similar to the 10 biggest companies in the US and the top 10 in the S&P 500. I'll come to this a little bit later where we look at the comparison between the two. But yeah, essentially, you're going to have similar companies over here. Obviously, because right now, the biggest companies in the US and in the world, most of them are tech companies, right? So there's no real surprise over here. Microsoft, being the most valuable company in the world, and of course US, naturally has the biggest weighting. And the good thing is, those are obviously tech companies being listed on NASDAQ. Otherwise, if Microsoft was listed on the New York Stock Exchange, it wouldn't be part of NASDAQ 100. But since most of those companies are tech companies, they are listed on the NASDAQ, and therefore you will be owning them if you invest into a NASDAQ 100 ETF. So that's really good to know. So you have Microsoft, you have Apple, you have Nvidia, Amazon, Meta, Broadcom, the two different alphabets, you have Tesla, and then Costco to round off the top 10, which is interesting. Probably Costco, the only non-tech company that's kind of a wholesaler where you can buy food and what have you, all kind of things in the US. So interesting that they made the top 10. But yeah, you can see also here the weighting. How much is the weighting of each of those individual companies towards the entire composition of that? And you see here, obviously, Microsoft taking a lion's share because it has the biggest market capitalization. So the more valuable company is, the higher the market capitalization, the higher the weighting in the NASDAQ 100, which is similar to the S&P 500, right? So if you go down the list, you see all the 100 companies. I don't know, there's one extra company that made it, but obviously, these things come in and out, but generally it's around 100 companies. And you see here at the bottom, those companies only make a tiny difference. I mean, 0.2% overall contribution and weighting towards the overall results. So imagine even the bottom 10 companies, for example, dropping big time and really going down, it wouldn't make a big difference to the overall performance of the NASDAQ 100, which is fairly similar to the S&P 500, right? They're the 490th biggest company. I mean, it's a fraction of the overall contribution. Still, it's nice to be diversified. Obviously, you can't have an equal weighting. I think it should be weighted by weight, by overall performance, because even if Microsoft drops and falls down to the top 20 only, then another company will step up and have a higher weighting. So you always bet on the winning horse, so to say, which I think is a good and yet another benefit of having an ETF, right? Because I don't know who's going to be the number one company in that NASDAQ 100 10 years from now. It may or may not be Microsoft, right? That way you always bet on the winners, even though you don't know exactly who's going to be the winner. Now let's jump over to Just ETF, which is a great ETF screening tool. I really like that. And I just picked up one of the popular ETFs based on the NASDAQ 100, which is from iShares, better known as BlackRock. And yeah, you can see here obviously some of the data. I'll come back to this in a second to show you different ETFs that you can buy on. But basically, when you go down, once again, you see here the top 10 holdings, what is currently in there, the weighting, as we said before. You can see here right now the top 10 holdings make up 45% of the performance of the NASDAQ 100, which is fairly similar to the S&P 500. Here I just pulled up currently the cheapest S&P 500 ETF in Europe, which I love myself. I started buying it and really enjoy it. If I scroll down over here, you can see also the top 10 holdings make up 31%. So it is a bit more diversified, 45% versus 31%. So it's more weighting towards the top 10 because obviously you have less companies in there. So the top 10 have a higher weighting than the S&P 500. So that's something to keep in mind. Other than that, you see here in the top 10 fairly similar holdings. The only difference, for example, Berkshire Hathaway is not listed on the NASDAQ. Therefore, it's not part of the top 10 in the NASDAQ. And we see here one big difference in terms of sectors. In the S&P 500, we have around 32% as part of technology stocks. In the NASDAQ 100, on the other hand, more than 50% make up technology stocks. So you can see really the heavy focus on technology. On the other hand, over here, we have much more diversification. We have healthcare, consumer discretionary, financials. You won't see any kind of financials in the NASDAQ 100, which once again, you may or may not like, right? If you want to benefit from financials, then it may not be relevant for you. But if you really believe in technology going forward, then you'll be very happy to have such a heavy focus on technology, obviously. But of course, performance really matters. The proof is in the pudding. So let's have a look at how those two performed over the various years. So when we look for year to date right now, comparing the NASDAQ 100 with the S&P 500, the difference is actually not that big. As you can see over here, 10% for the NASDAQ 100 versus 8.5% for the S&P 500. So here, not a big difference. But let's go to a 1 year period difference. And you can see already the gap widening. The S&P produced still a staggering 32% growth. I mean, that's really a nice growth over there, while the NASDAQ 100 grew by 45%. So already quite a difference over there. But let's go out even further to 5 years and you see already quite a staggering difference. While the S&P 500 still returned a respectable 85%, the NASDAQ 100 returned 150%. I mean, really unbelievable numbers, almost twice as much as the S&P 500. That, of course, is because of the strong focus on tech. And as we know, tech in recent years has really seen a huge boom with so many different parts of it. Of course, most recently with all the AI hype and other things. So yeah, they've really been seeing a strong performance. Now, if I go out even further, you can see that gap widening. S&P 500 over, what is this, since 2014? So around 10 years, 191% versus 440% for the NASDAQ 100. So really a major difference. Now, based on those numbers alone, you may say, Kai, why would I ever invest into the S&P 500? I should just go into the NASDAQ 100, right? But one thing you need to keep in mind, if you invest into NASDAQ 100, as I've shown you before, you really believe in technology. Now, there's no doubt that technology is going to be staying with us in the future, but also keep in mind, we did have periods in the past, like the dot-com bubble in 2000, when tech stocks were completely collapsing. These things may happen again, right? If there's really an overvaluation in certain stock companies, that growth may not continue forever and it might come down, right? Nobody knows. It may also not. It may continue to outgrow and outperform many of the more traditional stocks, such as Pepsi and Coca-Cola. I have no doubt that tech stocks will outperform Coca-Cola stocks, right? But then again, when we invest into ETFs, in the first place, we do that to diversify, right? Otherwise, you could just pick individual stocks and pick any of those top 10 in the NASDAQ 100 and put all your money in there. And some of those companies will outperform the NASDAQ 100 index, right? But the question is, once again, what is the winning horse? Is it going to be Microsoft? Is it going to be Tesla? Is it going to be Nvidia? Nobody knows. That's why you invest into an index. The same with the S&P 500. Right now, technology is doing well. But in the future, maybe it's going to be financial services. Maybe it's going to be biopharma companies or other sectors, right? Nobody knows. Now, it's more likely that tech is going to do well, but nobody knows for certain. That's why I think it's good to diversify. And while I do see bigger return potential with the NASDAQ 100, at the same time, it does have less diversification and therefore carries a bit more risk. Now, what are your options if you want to invest in the NASDAQ 100 and you're based in Europe or outside the US? Let's have a look. So once again, back on Just ETF, which is a great resource. You can check over here the various NASDAQ ETFs you can see. And obviously we want UCITS ETFs. So these are basically the ETFs you want to invest in if you're not based in the US. So here we have a couple of them, the best NASDAQ ETFs by performance. They're all fairly similar, but you can see slight deviations in terms of total percentage return. Then we have the largest NASDAQs and the cheapest NASDAQ. So you can see what you want to go for, right? You want to have the lowest cost ratio, or you want one that is most traded. It really depends on you. For me, I always like a combination because sometimes you find the cheapest one over here, but the trading volume is very little. So that means if you want to buy a big position or sell a big position, there might not be enough liquidity, or you might have a big difference between the bid and ask price, the spread. So in this case, I like something with a reasonable cost, but also a high trading volume. So the largest is the biggest one by trading volume. And we can see right here, once again, which is the iShares one accumulating. So let's click into this. And yes, it's accumulating, which is interesting. The most popular with the S&P 500 is distributing, where it's being paid out. Here it's accumulating. But it also makes sense that people choose the accumulating one because actually the dividends you get right now is really very little. Here we are on the one that is distributing. You can get right now a 0.33% dividend. And that's understandable, right? Because most of those big tech companies, they hardly pay any dividend. They use the profits they have to reinvest to further grow the business. It's different to some of the more established companies like Coca-Cola, Pepsi, what have you, that are part of the S&P 500. They pay some of their profits out to the shareholders in the form of a dividend. Here, they reinvest it. That's one of the reasons why they have such high growth, because they reinvest a lot. So, there's no right or wrong, but just to keep in mind also, if you do enjoy dividends, then probably the NASDAQ 100 wouldn't be your first pick. And here we see definitely the fund size is really good, but if I compare that to the S&P 500 biggest one, it's definitely much less. And yeah, obviously you can see here also in certain times, it was down 31%. So as I said, there is more volatility. So that's something to keep in mind as well. Tech stocks are definitely more aggressive in terms of growth potential, but they also could drop more aggressively in the short term. And here you have the stock exchange listings where you can buy those in which currency, which stock markets. We can go through and see what resonates with you, where you want to buy it. So in my example, I want to buy in dollars because I transact mostly in dollars, and therefore I could buy it right now either in Switzerland or in London, but I prefer buying it in London. So if I wanted to buy that, that's the ticker symbol I would have to look for. Then I would just go over to my phone, open up one of my brokers of choice. I use a couple of them, but let's say for this example, take Trading 212. Just open it up over here, go to search, and then put the ticker symbol CNDX, and boom, I can see right away iShares NASDAQ 100 accumulating based in London. Yep, let's pull it up over here. I can see the dollar icon. So if I buy it, it's in dollars, exactly what I wanted to. Market is closed right now. I can click on it. Obviously, we're entering the Easter weekend, so it's closed for next 3 days. I really like that feature about Trading 212. It's very easy to see if it's open or not. So I couldn't really buy it right now. But yeah, other than that, I would literally go ahead, buy it without any commissions, and I would be benefiting from the amazing growth the NASDAQ 100 has seen over the last few years. Of course, one thing to keep in mind is the higher total expense ratio, right? As I've shown you before, the S&P 500, which I'm buying, I have an expense ratio of 0.03%. Here, it is higher, 0.33. Now, the cheapest one there's available, it will go to as little as 0.14%. So that's actually much better. But then again, probably it's missing a bit of liquidity. And I prefer going with one of the big players, either Vanguard, BlackRock, or State Street. So overall, what do I think about it? I think it's a great option if you want to take a bit more risk and diversify further, right? I definitely prefer investing into the NASDAQ 100 rather than investing into an individual tech company, because I don't know which tech company will do best in the next 10 or 20 years. I still like investing in dividend growing stocks because there I get paid passive income over time. They have a proven track record and are reliable. A lot of the tech companies, they really see massive growth, but I don't know how much longer that will continue. So if you like tech companies, which I like myself, I would also consider definitely investing more into the NASDAQ 100. On the other hand though, the S&P 500 over time naturally will become closer and closer to the NASDAQ 100 because actually it's also based on the top performers, and as tech is doing better and better, you will naturally have mostly tech companies at the top. So the consolidation of tech companies within the S&P 500 will be more and more. So I wouldn't be surprised if in the future tech continues to do so well that the S&P 500 will get closer and closer to the overall performance of the NASDAQ 100, while at the same time still having other companies in there. You do get a higher dividend, as you have some companies like Coca-Cola and other dividend payers in there. So the dividend is still not super high, but around 1.4% right now versus the 0.33% on the NASDAQ 100. And of course, you're more diversified by also having financial companies and other stock exchanges. So for myself, I will definitely continue investing into the S&P 500, but I will definitely keep a closer eye on the NASDAQ 100. And honestly, now having really done my own homework on it, I might actually start opening a position in it and dollar cost average my way into it, because I really believe that tech is the future. And while knowing that it might fluctuate a little bit more, I don't think it's going to go away. So I think definitely some part of my portfolio should go towards that. But I'm really excited to hear from you. Let me know down in the comments below what you think about it. Do you already have a position or will open a position in the NASDAQ 100, or are you going to stick with a tried and true S&P 500? Next up, check out this video here. As always, thanks for watching, stay healthy, get wealthy, and I'll see you in the next one. Ciao.